Thank you for your time and interest. Privileged here to host a panel here on investing in robotics, AI, and the trends. Have with us here distinguished Professor Wyatt Newman from Case Western and Morten Paulsen, I guess a two-decade veteran of covering industrial automation companies at CLSA. Both are board members of us. So it's interesting, as Travis had commented, we were fortunate 5 years ago to have sort of had the belief and anticipation that robotics and AI were not niche technologies, but really foundational technologies that we believe would be applied to all industries, all markets, and it's happening now. I mean, fast forward 5 years later, we couldn't be more convicted in what we're seeing. I think our next panel will touch a little bit on what we've done with the index and the corresponding ETF in terms of how we designed it. But suffice to say, nothing goes straight up. We recognize there are going to be some dislocations in the market, and it's important. We wanted to get investors from point A to point B in as least turbulent airspace as possible, which is why we have the construction of the index like we do. So I kind of want to bring that comment out. Year to date, the index is down, the fund is down about roughly 6%. If you look at, as Raf talks about and what we talk about, is you have to look at this as a long-term theme. Some people are good, tactical traders. We think it's hard to actually tactically trade this because it's hard to pick what people believe are the obvious winners and losers. But what's really exciting about right now that I want you all to have some understanding with and belief is that we live in a period of massive innovation. And it's all happening because of basically our computing power and our costs of computing that's now creating an array of use cases that a few years ago were just science fiction. So I think it's important to kind of have that as a basis for understanding it. The index in the last 3 years has annualized at about 25% clip. So we think that it's actually delivering the growth that we expect. We have an index now of 87 names that trades at roughly 21 times forward earnings. That's earnings, not revenues. So we'll get more into that, I think, in the next panel. But suffice to say, glad to have both of you here. And I think the interesting conversation for Wyatt. Wyatt has been covering the industry for the past almost 3 decades. So he's got a breadth of knowledge and background. And maybe, what you could spend a minute or longer talking about, what you see as being different now, and talk about some of the trends that you're most excited about.
Well, thanks. Yeah, I'll just give you a little perspective. I have been in this game for roughly 35 years in robotics research, in industrial research, in government labs, and academia, so in different sectors, as well as in different parts of the world, in Albuquerque, Princeton, Cleveland, Edinburgh, Eindhoven, Hong Kong. So I've had the opportunity over time and over space and over disciplines to watch the emergence of robotics. And I have lived through the robot depression, and as Raf mentioned, through the neural nets depression. And when I saw it rising back up again, I had to ask the question, what's different this time? Is it just another roller coaster? But I do think, and in response to the previous question about compare it to the internet, I think this is a fundamental change that we're seeing. That there are points in history like the steam engine, electricity, the PC, the internet, that this is a fundamental change that we're seeing. And it's not just one inventor. There are points in history where there's a confluence of technology, of readiness, where things come together. So some of the reasons, from my perspective, have been buzzwords, and I'm leery of buzzwords, as we all should be, but there's also something behind it. So things like cloud computing, big data, deep learning, and Internet of Things. Now there is much hype in there, but it really was the big data, the existence of large training sets that helped lead to the breakthroughs in deep learning. And then more behind the scenes, there were technologies that we benefited from the gaming industry that gave us simulations that radically sped up developments, that gave us 3D sensors. as well as these graphical processing chips that turned out to be some of the hardware that helped to make the deep learning breakthroughs. So that's been followed and accelerated with Google's tensor processing units and with Intel's neural net processors. In addition, less sexy, but crucially important, I think the development of the robot operating system has brought standardization and reusable software to robotics, which had been missing for decades. And that has enabled some of the new robot startup companies to be able to get on their feet rapidly, much more cheaply than in the past. So you put these various pieces together, and I think that this is the moment in history where, and the robots have been stupid, and the robot brains that benefit from the deep learning, I think, have really been critical. So this is a sea change. This is a moment in time when we'll see that all these various applications are fun, but I think it's a fundamental change.
Okay, well, with that, why don't you maybe just talk a little bit about a few of the sectors that you see most interest about, and maybe some of the research that you're doing. We've talked about what's happening with sensors when you look at industrial Internet of Things. There's a vast amount of data that's capable of being generated, but we're just scratching the surface. So I think it's interesting where the world is going. There's a lot of implications down the line with cybersecurity and things like that. But that's another topic. But maybe you could just touch on that, please.
Right. So, and my very esteemed colleagues presented much earlier in quite a broad spectrum. But I think that is important about this sector is that it's not one area, that it is broad spectrum. That we see robots in logistics, certainly in medicine, in defense, in agriculture, manufacturing, of course, so in exploration. So it is so broad that it's in lots of areas of life. Now, I think that everyone sees the autonomous vehicles coming, right? All of the manufacturers in automotive know that they're going to have to get into this game, but there will be tremendous spillover from that as well. All of the investment that goes into the deep learning for that, into transferring of human skills, will also be applicable to things like medicine, right? So if you can autonomously guide yourself down a street, can you autonomously guide yourself through a heart operation? I think that we'll also see an acceleration of what has been teleoperated robots in medicine instead become, like you've seen in sci-fi, where they'll be instead autonomous. No one could compete with a sewing machine in sewing, and I anticipate that no one will be able to compete with a robot in surgery. The physicians will be elevated instead to supervisors and say, all right, I want you to do this here, cut from there, patch over there, suture here, move along. Then we will realize some of the benefits of the efficiency, the lower infection rates, the lower trauma. So I think there will be tremendous impact there. So navigation, certainly, we will see autonomous vehicles. We're already seeing some, very much the innovators, but that will be life-changing. And in medicine, certainly logistics, we're seeing it already. In places like Amazon, there will be much more of that. I think that in security and ultimately in home robots. Now that's probably the hardest sector to get into because the demands are so high on the flexibility. But I think that ultimately we'll see that'll happen, yeah.
Who doesn't want a home robot? So Morten, as a distinguished academia and analysts covering the sector for the past 2 decades, I think you've got a really interesting perspective. And again, kind of nothing goes straight up. There's a lot of really interesting demographics that are going on in Asia. Just interesting to note, in the US, we have sort of a visceral reaction, I think, to AI and to robotics as it relates to job losses and kind of visceral reaction because of that. We fear the robots because of sci-fi visions in Hollywood, yet it was interesting when I spent time with you in Japan last year to see in Japan and other places, particularly in Asia and in Europe, that it's not fear the robots, but embrace it. I wonder if you could just talk a little bit about that, and then let's shift gears to kind of what some of the short-term trends are.
No, sure. So probably just first thing I should say is that I really look at industrial robots. I'm based in Tokyo, so most of what I see is basically related to industrial side. But you do raise quite an interesting point, and I think quite a few of my friends in the robotics industry are actually highlighting the same thing. They say we go to Japan and nobody asks about unemployment. I think that Asia has a very different approach to robots, generally speaking. There is no talk about robot tax. There's actually talk about robot subsidy. So there's a very big fundamental difference between the two. I think in places like Japan, especially, robots they've been around for a long time. Some people say it's culture. The Japanese have grown up with manga, comics, basically being friends with the robotics, robots, etc. I think that's a very big fundamental difference between the West and Japan. And I think Asia, when I look at China, when I look at other Asian economies, they're culturally a lot closer to where Japan is.
Right. So obviously last year, for some of you that may pay attention to the trends in the industry, Japan industrial automation market did fantastically well last year. This year, it's struggling a little bit. I wonder if you could talk about the trends that we're seeing in Japan and in China and what's going on.
Yeah, sure. First thing I probably should say, because you mentioned you're down 6%. When I look at my average for stocks in Asia, we're down 20. So you're doing very well. And I think that has to do with the diversification that you have built into the ETF. So, but to answer the question, what have we seen, what has caused this volatility from pretty much since January? The first of all, of course, is that we started off with very high valuation levels. But I do think that especially going into the summer, we have seen a bit of a slowdown in robotics demand in China. Things held up pretty well for the first half, but for the second half, we're basically looking at a weaker market. I still believe we'll end up sort of flattish for the year, but we are seeing a weakness here. I'll give you two reasons for that. First one is that we're up against very difficult comps in terms of very strong demand from Apple last year. Apple's investments will always be very cyclical. The second reason is also, of course, the trade dispute that's going on. I was in China last month, and it was interesting. I did the Chicago IMTS show back-to-back with the trade show in Shanghai, Industrial Automation Show. And the view on the outlook for resolution in China for the trade war is very, very different. I feel most people outside of China will think, okay, this is going to sort itself out, but the Chinese have taken a very negative view on this, and they're not expecting any sudden solution here. This is, of course, having a negative impact on parts of the investment environment. When I say parts of it, of course, if you're an exporter, basically you would put most of your investments on hold at this stage, including robots. That said, this, I think, is just a speed bump. I totally believe that China is going to continue to be one of the biggest drivers for automation. Going forward. Henrik had talked about robot density, which I think is a very important metrics. China has something that I've not seen in any other country, and that is actually a robot density target. And they're basically saying that we want to have 150 robots density by 2020. As of last year, they had 74. So they're essentially saying, the government is saying, we want to double the installed base of robots in the country. And you have big subsidy programs in order to achieve that target. That's something that's very unique to the Chinese market, and this is one of the reasons why I think, yes, we're hitting a little bit of a speed bump right now. I find it very, very difficult to be negative on Chinese robot demand longer term. The second thing I want to say is that I also think that we're looking at diversification beyond China. A lot of robot companies that I have met with recently are actually talking about India as a big market. This is, and also Southeast Asia. We have Vietnam, and probably next year we'll see Mexico coming back very strongly. I actually believe those three countries by next year will become top 10 robot users in the world.
Okay, thank you. So Wyatt, a question for you. I mean, we obviously get a question from investors, what can go wrong? I mean, investors always want to worry about that. And when you think about robotics and AI, it sounds like other technology, and it sounds, like hype, right? Maybe you could make some comments on that. I mean, just briefly, the only risk that generally we kind of see, maybe you believe this too, is really more on the regulatory front. And I think that's why it's really important to be diversified, because if you're just geographically focused in a certain area, you have the risk. If you're just in specific sectors, you run a higher risk. We do know that the AI has capabilities to be a very disruptive capability. Some people, think it's hype. I actually think that it's a tool to induce productivity and growth, the likes of which very few believe. And Raf and I talked about it. What people's envision of the internet was 20, 30 years ago is completely different than what's actually happened. And maybe you could talk about risks that you could envision seeing.
Okay. Well, I have in risks in investing, I think is...
How about just the sector? I mean, or the industry?
As we discuss internally, though, you look for the companies that are committed to AI and automation, because in the long run, that will be the benefit, right, because of this sea change. And I see the long-term trends are, from my perspective, quite clear, right, from the students who are now have just exploded my class size in computational intelligence, from my graduates who I see are going off and getting jobs in robot startup companies like I've never seen before, and even little kids who are just so excited about robots. I just see this whole generational wave coming in saying, we're ready, we want them, let's do this. So I think that in the long term, that will certainly be a win. Now, in the short term, there are these concerns about things like liability. And one may say, well, what happens when an autonomous vehicle gets into an accident? Does it fall? Right? And there'll be a whole lot of finger pointing and such. But I think what will happen before long is we'll see that turn upside down to where they'd say, how dare you drive your own car? You have to pay a surplus in insurance for that, because no human will be as good as a computer at driving a car. So I think that a lot of the things we see will get turned upside down. And so I guess the risk, we will see big change, which will be, as the Chinese say, interesting times. But there's both threat and opportunity. But I think that if you can identify who is invested in invoking the benefits of artificial intelligence and robotics, that on the whole, on the average, that those companies will thrive.
Okay. Morten, I see you chomping at the bit. I had another question for you, but I think I'll let you answer this one.
I thought I'll just add a little bit, because I don't have your knowledge about the technology here, but some of the things that I look at when I look at the winners, the challenging thing here is that we're sort of looking at so many different IoT platforms, and they all seem to be doing more or less the same thing. So typically what I look for is, one, I like to see scale. I think that essentially this is really going to be a scale game. I think a company with huge install base of either, whether it's robots or whatever it is, that is out there in the field is a huge competitive advantage. And the second thing I look for is simply, do I see management being committed and putting sufficient amount of resources into it? That would be the simple framework I would be looking at from kind of an equity investment perspective.
Okay. Maybe I'd toss in one more thing. That when I put on another hat, I also do consulting, and across the spectrum, I see this pent-up opportunity for using data. In manufacturing, I've heard manufacturers say, well, we're collecting all this data, we're not sure what to do with it, but there's a lot of it. In healthcare, collecting tons of data and saying, now there must be value in here, what is it? Even in equities, and saying, well, I really think we should be using AI in our trading. And they're all right. They don't yet know how to take advantage of it, but they understand the value of the data. And when that gets connected with the AI, there will be a whole other explosion of value there.
Okay. Morten, just shifting gears back to China, maybe you could just talk a little bit more about the trends you're seeing there. I mean, there is right now maybe a speed bump, going on there because of trade issues and other issues, supplier, constraints and so forth. But what's really exciting about China is their commitment to automation. And in their 2025 economic plan, it is completely distilled around automation. And you look at AI, as Daniela commented, what's interesting and exciting about China is they're really likely to be very successful here. Why? Because they got the people, that means they got the data, they got the capital, and they got the political initiative or will to make this happen. So, China is an interesting place, and they're really, with Raf's sale of Kiva Systems back in 2012, in my mind, and what Bloomberg commented, was a seminal event. I mean, it really created a global robotics and AI arms race that's not just going on in the US, but going on globally. So I just want to put that framework out there. But maybe you could touch base on a little bit China and those trends and anything relevant that you want to add to that.
I mean, there's no doubt that China has been an enormous driver. Just some background. So I started looking at the Chinese market around 2007, and to do deep dives there, and I've been going there on a regular basis ever since. In 2007, China, I think the turnover was 8,000 robots. As you could see on Henrik's slide here, we were actually looking at 140,000. So we've gone through just a very massive change already. Where I think China is different is that in most other countries, we have sort of seen the automotive industry going first, and then we see this automation spreading into other industries over time. In China, I call it kind of almost a flat triangle, where we just see multiple industries automating side by side. I think if we look at the big trend of the past 3 years, then of course it's been the automotive industry, but it's actually been the electronics industry, where we have seen huge investments into automation, especially on the assembly side. I don't think that trend is over. It will be cyclical, just given the end markets that we're looking at here. But then I also believe that, as elsewhere, China will be very quick at picking up also on the logistics side.
Okay.
In terms of probably just going back a little bit more near term, because what are the catalysts that I see for a change that can come? And I actually can identify 2 catalysts to actually really revamp, get the Chinese robotics market back on track. The first one will be a resolution to the trade war. And given the fact that the Chinese have taken they're really in the bunker mentally about this. If we see a resolution, I would say it would be on the day, would have a very positive impact on the automation market right away. The second catalyst I would highlight would actually be Apple, because Apple, with its supply chain, is so big that if they are going to revamp the iPhone in 2019, that could also be enough to restart an investment cycle that would go into robotics, machine tools, and vision equipment, and a broad range of industries.
Well, another question for you, Morten. Just in the spirit of the conversation, we create an index because we certainly believe that trying to pick the obvious winners and losers is extremely difficult. And in hindsight, you think about the internet, the obvious big winners before were AOL and Netscape that aren't around. Everyone is an expert on Amazon. I'm not sure they were 5 years ago. They certainly weren't 10 years ago, and they obviously weren't 15 years ago. So it's interesting to have this perspective, and he's seeing how fast the innovation is happening. I mean, Netflix is up today on amazing subscriber numbers. I mean, people forget that 5-6 years ago, that was a $5 billion company. Now it's a $150 billion company that could never beat the incumbent people, because they could never spend enough money. Just curious on your perspective on, covering, again, your perspective is covering industrial automation, so it's not completely across the entire value chain of robotics and AI, but if you could share some thoughts on that would be helpful.
Yeah, I guess you're essentially talking about the diversification, and there's no doubt that within your portfolio, I'm really looking at the volatile part of it. I can see that even within stocks that I look at, there's no doubt that companies where you have end market diversification are just doing a lot better. And that's really kind of stock by stock where we can see you have very different end market exposure. I would highlight that, and of course, if you have that in a portfolio, in an ETF, etc., that will give you a lot less volatility. So yeah, I think it pretty much comes down to diversity.
Well, that's what we try to do. Obviously, our index, just for your information purposes, is 87 companies. And just to understand the construction, we only have 2 position sizes or weights. We effectively have 40% of our portfolio in what we really define as more pure play companies, and 60% is in emerging technologies. The pure play companies have a 2% weight, the non-pure plays have a 1% weight, and we rebalance quarterly to smooth out the ride. So that's, again, how our approach, we think, is very different than a lot of people. And we think that it is so early in the growth curve in robotics and AI. And when you look at where the world is going, I mean, it's pretty exciting to listen to the narrative in the media now. When you hear Sundar Pichai 3 weeks ago saying that he believes that AI is the most important technology of our lifetime. I mean, the FAANG companies are investing in using these technologies to enable their business. They're just not profiting from this opportunity. So that's what we're trying to really focus on. So again, what's amazing, and we're so thankful to have advisors like these guys, and Raf and Daniela and Henrik and others, that we think gives us a major advantage tool to understand the technologies and where the world is going. Okay, and so maybe that's going to be touched in our next panel, but I think that's it, and we thank you for the time, gentlemen. Thank you.